Hello traders, it's 8:02 a.m. Chicago time on Tuesday, the 12th of May, 2020. This is episode number 1753. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on sentiment as we push above the yesterday's settlement across the indices. The leader this morning is crude oil up 6%, trading at 25.59 after closing pretty close to Friday's close yesterday, up $1.45, again up 6%. The Russell's leading this morning. The index complex trading at 1328, up 13 points or 1%. The Dow Jones up 131 or half a percent. The Nasdaq's up 43 or 44 points, up a half a percent, and the S&P is up 13 points, 12.75 points, 0.44%. The laggard this morning is the dollar down 42 cents. That's where we stand this morning. Risk on as we push into yesterday's double top at 37 on the S&P, a week high, a double TPO high in there, expecting that to push through. The overnight session shows rallying throughout the European session for a change, and the market is really looking to continue to squeeze higher despite what anybody thinks of the economy and the fact that we're all sitting at home in a shelter in place and all of that. The fact is the market does what it does. And the old adage is the market can be irrational much longer than we can be solvent. So that's where we stand this morning. A quick look at what's potentially pushing things around this morning as we look at the feed, the news summary. China's move to waive off tariffs on some U.S. imports supported futures of Wall Street's major indices. Most European stocks edged higher, led by defensive shares. Asian stocks tumbled on growing worries about a second wave of coronavirus infections. The dollar was down against its peers. Oil prices climbed following unexpected commitment from Saudi Arabia to deepen production cuts in June. Gold prices advance. Inflation data is scheduled on the economic calendar. We already got that inflation data. The U.S. inflation rate year on year came in at 0.3%, a little lower than the 0.5 forecast. Core inflation came in also lower at 1.4 versus 1.6. So that's where we stand overall. There's been there's been back and forth between the Trump administration and the Chinese government, and there's a lot of pressure on both sides to come to terms and work things out. So I believe Trump was quoted as saying yesterday that he may not come to an agreement no matter what happens. He may not come to an agreement on tariffs with China, which gave the market some jitters yesterday afternoon. So now we've recovered from that with China backing off on tariffs on U.S. imports, and the market has taken that and running higher with it. In terms of the calendar, currently both Feds Kashkari and Bullard are speaking. We're looking for testimony from Feds Quarles at 10 a.m. Eastern. At 10 a.m. Eastern, and then we're looking for Feds Hawker at noon Eastern. For those who are trading ags, don't forget about the WASDE report coming out at noon, and the monthly budget statement is due at 2 p.m. for April this afternoon, and then we get API crude stocks at 4:30, and we get Fed's Mester at 5. This evening, we get the Westpac Consumer Confidence out of Australia at 8:30. So that's what's on deck for the calendar, what's scheduled. Here's the review segment. Yesterday, we were opening below Friday's close, which was quite bullish. The market had pushed quite high in the overnight session and had pushed lower. Given the overnight stat probability, the expectation is we would at least push the low before we bounce. And so the main expectation, given the way we were forming up overnight, is we're likely to push down at some point at some point in the day, either later in the session, as in scenario one, or early on. And I was looking for a failure at 08 and potentially 18 for a turn down. That did not happen at all. What actually happened is scenario three. Scenario three was looking for it to push through and struggle at 08, 18, 30, and end up at 39. At 39, that's right here at 39. Here's what actually happened. So we can compare forecast versus other. We did not end up pushing down. We had a very tight open auction. Look at that zipper, a tight open auction that we dipped into twice right here. Right here, we dipped into this zipper right here and held this support. This is an area to keep an eye on. And then we struggled at 2908, 2909 on the stock zone here. So this is exactly as we had anticipated. The next area of resistance was at 2918. We stopped at 2917 and formed another zipper formation right here. Finally broke out into the prior high, 2930. Stopped at 27, right just below the close, Friday's close, and then we finally pushed to 37, came back, pushed to 37 again, and sold off almost to the mid at the end of the session. But we end up with is a legitimate double top, a weak high, and then the overnight session tested that high at 36.50 just now, and we have basically almost three tops going. So we did end up getting up into this 39 area as you see it here. Again, make sure you're set to 1080p on YouTube to see these prices, otherwise they're just fuzzy. But we did get to 39. We stopped at 37, just short, can't be that accurate or that precise. And we ended up drifting off. And what we finished with is, again, a blunt top, a weak high, a very distinct low volume node at the 19, 18, 19, 19 area. We have an additional low volume node in the 29, 13 area, and then another distribution at the bottom. This was a very, very odd profile. We don't see these often where we have three distributions forming in this weird kind of way. The market's definitely in price discovery mode. It is squeezing shorts, and it'll continue to squeeze shorts by the look of it. We're looking at 29.4875, 29.50 next. It's likely to continue to squeeze shorts as the auction progresses. So that's where we stand. The delta finished slightly weak, but the delta and price were moving in congruence yesterday, in the same in agreement yesterday, and so overall this is likely to be a very this is likely to continue higher, in my opinion, unless interrupted by news. In terms of the overnight session, we reopen, we attempt to push higher, and we immediately drop down into the low of yesterday. We pushed the low of yesterday by 4 ticks, and then bounce right back up to the mid, and then attempt to push lower. Again, the European markets open right here, and Europe just takes us up, and we've been pushing up higher and higher and higher. And what we have at the top again is a weak high and a very similar formation as yesterday. We're basically accepting yesterday's most traded price. The VPOC of yesterday is right there, right? 29.32, something like that. And then the overnight point of control is 29.3275. The market is accepting these prices very, very clearly in volume. and it's likely to continue to push directionally into that 2950 area. This is what I'm looking at today. A lot of the volume, a good portion of the volume occurred below the close yesterday, so the inventory is probably more short than long versus the closing price yesterday. But the strength is obvious this morning. Let's take a look at Bookmap. Here's ctbookmap.pro. So we reopen right here, 5 o'clock Chicago time. We squeeze up and then we immediately tumble into this liquidity down here. A nice little bounce, and then we pull back, and then Europe opens, and this is where we start to grind up, and we push through all of this liquidity. This liquidity actually provided a nice little long a little bit earlier. As I zoom in here, you could see us pushing into this heavy liquidity and breaking through. So what we have is in this big dot, a nice big collision. The delta on that collision is very, very strong. It pulls back a little bit, pushes through, and then pulls back to that collision again right here, and then continues continues up higher. So there was an 8-point squeeze there before we rolled over, and now we've put in this second top here, which constitutes the overnight high, which is also yesterday's value area high and yesterday's high basically within a few ticks. And it looks like it is not giving up any territory to sellers and likely to drive into that 2940 liquidity up above. Down below, as expected, we have liquidity down between 29.19 and 20. That's a key area from yesterday, right down here. Right down here, and I expect that to trade through if it does get down in there. We're already above the 62% fib from the all-time high to the last swing low of March. So we have pushed way back up from the ATH all-time high to the March low, this selling low. It was like 20, what was it, 21 something. This is the March low, right? And we are already we're beyond that 62%. It's just a little bit below us right down in here. It just looks to me like the short squeeze will likely continue. So that's the heat map and the order flow picture. I mean, there's a lot going on here, and you can see the next big area above the 2940 would be 2950, and it looks like that's where we're likely headed. Okay, below again 2920 and 2913 half are the only liquidity areas, big liquidity areas below. What are we looking for today? Let's see. Oh, looks like I lost sound there. So I'll go over that again. an open auction. Right, we're opening right above the point of control, the most valuable price of yesterday. Expecting an open auction in there, put in an opening swing. Um, and then I'm looking for it to squeeze above the 37. I'm looking for a spike above the 37, settle back down at the 37, and then start to squeeze shorts into 50, consolidate at 50, consolidate at 50 here, and then pull back potentially to the prior high and just hold steady here. That gives us about 20 points of range. If it's able to, it may squeeze up into the next stock zone at 29.6250, but not likely. Remember, as we push higher, uh, as we push higher, we are we are as we push higher, we are likely to see the VIX continue to collapse, and therefore range and volume continue to collapse as well. So I'm not expecting ranges to be very wide. The secondary scenario is a squeezes that high, uh, causes a flush, and then spikes down back into the yesterday's point of control and then revisits this 19 area where we have that liquidity before the bounce. And in that situation, we would get somewhere around 29.50 to 29.19, giving us a slightly wider range on the sell side. These are the two key scenarios of the day, and that's where we stand currently. Does that make sense for everybody? Sorry, I lost the sound there. I think I might have hit the mute button inadvertently. Um, but the last, the worst case scenarios of the way that market's been trading for the last couple of days, it takes a little bit of adjustment. Where even I've been trading for 20 years, and it's still an adjustment to deal with how the market kind of it goes into jerks and fits, and then calms down, and to be able to calm down with it. So just be malleable, be prepared to be flexible. And at the end of the day, we are surfing the wind and the wave that is given to us. We don't make the wind or the wave. So don't try to impose your thoughts. You think with a quarantine and 25, or now they're saying 28 million jobs lost, that the market should be trading at 1,200 in the S&Ps. Nobody cares. The fact is, you got to look at what's there and ride the wave that's in front of you, and not the idea that you have in mind. Don't worry about what the global macro guys are saying and how they're baffled by the fact that we are up here near 3,000 in the S&P given the conditions. I hear that a lot. Just trade what's in front of you, please. Just make sure you keep the action in front of you as the ultimate guru and guide. The ultimate guru about the market is the market itself. Okay, so I'll leave you with those thoughts. For those of you who have not checked out EdgeClear, I would really appreciate your support. This is a brokerage that I launched last month with an incredible team of brokers, an award-winning team of brokers, and I want to get support for it. You have to clear your trades through a broker anyway. Why not talk to a human being who'll take care of you? Also, the brokers do trade, and they do understand, trade the micros, and they do understand what traders' mindset is. Our goal is to have you focus on the market rather than on your trading platform and fees and commissions and all this stuff. Commissions are competitive. This is the best rate you're going to get, in my opinion, for the micros all in, including Rhythmic or CQGW, the web API, all wrapped in. That's 98 cents all inclusive. For the micros, I doubt you'll get that somewhere else without some strings attached. We're also very, very competitive on the minis. Give us a shot. I'd like to see this thing take off. There's a lot planned for traders, and the goal is to develop technology and provide you with feedback on your trading eventually. Good luck, and I'll talk to you soon. Take care.